The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have Samuel Archibald Arrington Hicks Crawford. Arch Crawford is going to be our guest at 9:30. And then tomorrow we're going to have Rich Anderson on for our annual holiday show. This will be our first one. But anyway, Rich will be on, which will be on tomorrow. So, but right now what we're looking at here, I started to talk about the breadth of the market. As you can see, during this last rally for the last 5 days, we've now turned down and start making more new lows again in the market rather than new highs. That's usually bearish, but you know, we'll see if that's going to mean anything over the long haul. The commodity markets are getting hit badly, even though that Saudi Arabia announced they're going to do everything they can to support the price of oil. We still have oil trading below $39 a barrel now, based on where the December went off the board on Friday. It went off the board early this week because of the Thanksgiving week. But once we broke that that 39.50 level, you know, it just literally it started to just melt down, and it's continuing to go lower. Even though we had a $2 rally in oil this morning when the Saudis came up and said they were going to support the price of oil, it's gone up $2 and then backed off $1.50. So it's getting some good volatility, but the market still looks lower, folks. The commodity markets are still going lower. We have copper getting ready to break $2 a pound. That sets up $1.90 or so in copper. We also have gold getting ready to, looks like it wants to get down to make that 10.50 level that we've been talking about for the last few weeks in here. So we'll see if that's going to happen. And of course, silver is trading below $14 an ounce again. So there's a lot of deflation out there, and yet there's inflation in stocks. So we'll have to see how much the stock market is going to go up from here. The New York Stock Exchange Index, as of where we stood Friday, again had another 61% retracement over the last 5 days. You'll have to bear with me, folks. For some reason, the computer is a little bit slow today. I don't know if it's getting ready to take a holiday break or not, but that's what it's doing. So I just wanted to show that we did have the 5-day rally correcting that oversold condition coming into November 13th. And now we have gone up to the 61% retracement. In fact, we closed almost exactly there. Now the New York, the Dow Jones, the S&P, and the NASDAQ all made 786 retracements. And of course, that's basically 150 stocks out of the thousands that are out there. But that's what it's doing. So you can't fight the tape, as they say in the trade. So today will be an interesting day, as will be an interesting week. We have a short week. We're only open a half a day on Friday. We're closed on Thursday. And Wednesday is typically one of the slowest days of the year. I think the only one slower is that one right before Christmas. So we'll have some probably good volatility just because there's not a lot of orders in the market. And with the markets at these levels, you can certainly, you know, go to levels that we haven't seen in quite some time. We still have a few divergences out there, but some of the stocks that I've been following, Google and McDonald's and Nike and some of the others, are back at those high levels again. Google, it did exceed the high by a little bit, and we'll see if it's going to continue here. There's a really nice pattern on Google on a short-term basis. In fact, I could, those of you that that like to trade on a shorter term basis. I've got a 4-hour chart here that really is a nice one for Google if you're interested in ABCD patterns, and we'll watch that unfold today, because we're very close to completing this big ABCD up here with about $2 or $3 higher in Google. So keep an eye on that, and that's also the 1.618 expansion. Now, what I'm going to do is I'm going to post into the Tiger TV Den is a article that has come out from University of Israel. It's basically, the article says that technical analysis does a great job of determining price direction, and does a far better job than fundamental analysis. Now, this article basically reiterates what Dr. Andrew Lowe did at MIT when he wrote his book in 2001 called The Non-Random Walk Down Wall Street, which is 750 pages of some of the most amazing formulas you've ever seen. This article doesn't have a lot of formulas in it, but it has a lot of references. And part of the problem I had with the article, I mean, it was way over my pay grade, but I could understand the idea of what they were trying to say. But it didn't even list Dr. Lowe as a reference. That really shocked me, because he's done more work than all the other articles in there combined, because he went over a 36-year period from 1962 to 1998, looking at stocks, and he looked at 800,000 patterns. I mean, that's just truly amazing to me. So, but these folks didn't. That doesn't mean it's bad. It's just that they didn't. Maybe they didn't even know that it existed. I doubt it. But that's what's happened. Just another thing that says these things they're nothing more than patterns, and that's really all they do. These things work, but they don't work all the time, folks. There's just absolutely no way that anything's going to work all the time, and we'll just leave it at that. What you try to do is you put the probabilities in your favor. The long-term picture in the stock market based on that New York Stock Exchange Index, to me, has not changed at all. We have still not taken out the November highs, and we're coming into the most bullish week of the year. Statistically, the week before Thanksgiving is one of the most bullish weeks. It is the most bullish week of the year. I think it's in second place after the second week in January. I'd have to go back and check that. I just know that it's right up there as either 1 or 2. I think it is number 1, because the January effect can stretch all the way out into February, and of course we have that coming in towards the end of January. And the January effect basically means that the small caps start to gain on the large caps. That's what you're looking at. And if you take a look here at what we're seeing in the small caps here, we will look at the IWM, which is basically the small cap index, and you'll be able to see that we are lagging badly. When you stop and think that the New York Stock Exchange Index is at the 61% retracement, the Dow, the S&P, and the NASDAQ are all at the 786 retracements of the high that we made back in late June at that time. Now, we do have a full moon coming in a couple of days. That'll be coming in on Wednesday. The effect could start anywhere from today, tomorrow, even Thursday or afterwards, because it's got a 2-day orb on either side. So we'll see. Remember, we did have one that bottomed here 14 days ago, and that gave this last little that's not true. We went up I did it backwards. We topped on that within 2 days of the last full moon. That was a new moon, Larry. Let's go back and do it. It was a new moon, and now we're coming into the full moon. It's nothing more than a 14-day trading cycle is basically what we're watching when we're doing this. We have gold and silver, as I mentioned before, making new lows. This is following along with the work that we shared from Larry Edelson. That was very interesting. It's on the neural networks, and if those of you that have ever worked with neural networks, they're a good way to go back and see past history and how it repeats itself. And that's what you're looking at when you're usually watching these things. There's a lot of different ways. There's genetic algorithms and fuzzy logic and all kinds of things like that. But as you can see, it's the end of December, end of November here, and we're into this time frame now. So we really want to be looking for a potential low here in gold and silver, and we got silver, below, quite a bit below, $14 an ounce today. So that looks pretty good. But the overall picture in the gold market is still telling us that we want to get down to, this is the one that I posted when I was doing my work over the weekend, because I still thought we were going to get down to this 1049, 1050 level in gold. We're about $13, $14 away from that. So I still think we want to wait for that. But when we get there, I really think we have to take a look at it, because when you get to that point, you're going to be looking at a 3-drive pattern, folks, from March to July and July to December. That's a pretty good one. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. You've got some pretty good symmetry in there. You've got an ABCD pattern from the high at 1239 to the low at 1068, and then up to the high at 1192, and that takes us down to the 1049. So you've got to take a look at that. And if it's Christmas time, if you want to buy yourself something for Christmas, buy yourself some silver rounds. I always think that that's something that you could always have in your portfolio that will make it very interesting. Because I still think everybody should own some silver and gold based on what's happening in the world at this point. Folks, when you hear these the market will rally just because it's oversold like we did in crude oil, but they can't, the Saudis they can affect the price of oil if they take it off the market. We will have Rich Anderson on tomorrow, who actually does a great deal of hedging for a couple of the big guys in this, and we'll watch it. Remember, when you're trading crude oil, you're trading against 6 people. The 3 people in Singapore, there's 1 in New York, there's 1, I believe, in Sweden, and another one in London. Those are the largest big controllers of the crude oil market in the world. There's actually 6 of them. I don't know their names offhand, but they really are the ones that move the market more than anything else. So you've got to, keep in mind that that's, just one of the things that you have to worry about. Well, you don't have to worry about it, but you're actually trading against it. Now, there's one other thing that's come out, folks, just today. Was shared to us by Dr. Scott, one of our listeners from down in the Florida way, and he shared an article that just come out about the. Let me just guess. I'm going to print it here so you can take a look at it. And hold on, we'll get it in here. And I want to put it in the room because I think it's very important, and I certainly want to talk about it right after the break. And that is, they are going to stop accepting stop-loss orders in the New York Stock Exchange and NASDAQ. And we have to talk about that.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, just when I think I've heard everything, they try something new. I see Dr. Scott sent us this link to that I've posted into Tiger TV here about how the exchanges, New York Stock Exchange and the NASDAQ, are going to stop taking stop-loss orders. I've been doing this for 55 years, and I was taught that a stop-loss order is very necessary, because if you're not using a stop-loss order, you're basically telling the market, hey, I know more than you do because I can protect myself better than you can by putting my order in. Folks, this smells, I don't want to use the Italian analogy because Tom will throw me off the air, but this is not good. You know, the only protection we have is a protection against ourselves, and that's what stop-loss orders are for. Some people are disciplined enough to use a death stop. In other words, if it hits the price, you'll be able to get out of it. But think of the people that are working during the day that their stop-loss order might get hit, and you know, then they can't even do anything. But this is not good. I don't understand. I'll have to reread the article several times to try to understand it. Now, the one order that they should disallow, which is no good in my opinion, is the stop limit order. In other words, that where you have an order to stop. You say you're in IBM and you want to buy stop at 138.20, and the market gaps above 138.20, and you're limited at 138.20. In other words, you're not going to get into that stock or get out of it if you're short because it went above your limit. That's not a very good a very good order. Professionals never use that order. I would think they would take that one out, but to just take out stop loss orders, I don't understand it. Now, the rationale is because we had some volatility there in August and the market went down and knocked out a few people and then went right back up. Hey, that's the nature of the market. That thing had been going up for 5 years without a correction pretty much. And so this is not good news, folks. We got to follow this closely. I'm a little concerned about that. I'd really like to sit in at one of those meetings when they make this decision, because my gut tells me that I'll bet you if they had a group of 10 people and there only 1 or 2 of them were traders, because they would anybody with any experience at all knows that you have to protect yourself against the most dangerous person in the market, and that's yourself. And you have to. I just don't understand it. I'll have to go into it and read it a little bit. But when I read something like this, this is a really. I just don't think it's very good. Listen, if the stop loss orders were really no good, the exchange would take them because they would be able to buy against all those stop loss orders, and I don't believe that's the way the market works. And, that's what I would be able to see. Now, I don't believe the fact that they move these things. They move the things short term to take out where the stops are, because most people put their stops at the previous day's highs and previous day's lows. That's the simplest thing that most people do. So that's why you'll see that happen, all the time. But I personally don't believe that you'll see people going down to take out stop loss orders. They hit there because that's where the market was going to go anyway. I believe that. That was one of the reasons I went to the floor of the new CME back in February of 1982, and I wanted to see how the orders were held in the brokers' decks and stuff. And believe me, I can say after being down there for 3 years that it was extremely equitable. I didn't see maybe 1 or 2 instances where there might have been a little bit of a problem, but it was just a very, very short-term aberration. But overall, 99% of the orders were filled, executed perfectly at where the market said they should be. But those decks that these people held were so thick that there's no way they could have stacked them anyway. But now with electronic trading, you can certainly do that, and that's part of the problem. Remember, we're having volume hundreds of times more. When I first started trading stocks, folks, back in January of 1985, the volume on the New York Stock Exchange was 5 million shares. 5 million shares for the day. That was a record volume in January of 1965. We do 5 million shares of Intel in the first 20 minutes. So, we're doing billions of shares every day. And if you stop and think what the Forex markets are doing, they're doing trillions. So I really have to follow this about the stop loss orders. That's going to be that's not a good order. I just don't understand that. I really don't understand it. That's the way that you protect yourself against yourself. And I know sometimes you get stopped out right at the high, but that's just the nature of the beast. But that's because you were wrong in the market anyway. So keep that in mind when you're doing this. So, okay, we'll take a little break here. 877-927-6648 from the offices of Duke & Duke in Philadelphia, Pennsylvania.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, looking good, Billy Ray. Feeling good, Lewis. Samuel, Archibald, Arrington, Hicks, Crawford. Are you on the air? Uh-oh. Looks like we're having a little bit of a problem here. 10-4, 10-4. Evidently, we don't have Arch on the line. I have to figure out what's going on here. I know what he was going to talk to us about was to see if we were going to continue on with this long-term breadth. Al, do you have any reason why we don't have Arch on the line? Shucks here. Let's just figure out what's wrong here. Well, we'll get him on another time. Oh, well, we'll wait and see. I'll tell you what, I'm actually in a state of shock thinking about what is happening with these stop-loss orders being taken away from the New York Stock Exchange and the NASDAQ, folks. That means you're going to have to pay attention. And not only that, but if you stop and think of all of these automatic trading systems that they have, that we are going to be looking at, something really really, really bad. 1 second, folks. I need to call. I need to find out why Arch is not on, because I just spoke with him a few minutes ago, and we'll try to get him on here. 577, and we'll see if we get him back on the air here if we can, and see what's going on. So anyway, that's going to be. I just did. It's right there, Al. You got it right there. If you'll just give him a call, we'll get him on, and I'll post a chart in here that he forwarded on from his letter. And I've known Arch for 40 years. He's the premier financial astrologer, one of the big ones, along with Bill Meridian and Norm Winsky. He's really got some really interesting history and a lot of experience in the markets. What we're going to do here is we're going to put this basically shows the breadth of the market, and this is one of the charts that Arch wanted to talk to us about. But if you look at that chart on the upper right-hand side there, that Dow Jones Industrial chart, you'll see the ABCD Gartley pattern. You also see it on the left-hand side down here with the NASDAQ, and then you also see it in the S&P. So this is what's happening. Whether it's going to be a turn from here or not, remains to be seen. So we'll wait and see. Now, copper did not quite get below the $2 a pound level. We certainly broke below the 207, which was last week's really strong support. We rallied 3 cents from there, and then quickly dropped another 5% down to the $2 per pound level, but we'll wait and see. These markets could be waiting for gold to make that 3 drive to a bottom pattern at the 2050. Let's try it again, at the 1050 level. So we'll see if that is going to be the case. But whenever I look at these charts over the weekend, I say, how can these people be bullish? Because oh dear, that's not true, because I just called that number. Just a second, let me give you another number. Hold on just a minute, Al, and I'm trying to get in touch with Arch. I had this all set up, and we'll see see if we can get it running here. And then we'll go from here. We'll see if it's not. Otherwise, we'll have Arch on Wednesday, and we'll see if we can get this up and running today to get Arch on the line. So it won't be a problem. That's probably a function of the speaker that you're listening to right now. I probably made a mistake somewhere along the line, and we'll see if it's going to hold. We have a question about the silver market. We did go below $14 an ounce today. We bounced back a little bit to get above 14 again, but frankly, I don't think it's ready yet. Really, we need to wait until the gold hits that 3 drive to a bottom pattern down at the 1050 level. Remember, the low we had last year in gold came in at the 1030 level, which was a big fib point, on the long-term chart. So we still want to be able to watch that. We're having deflation, folks, all across the commodity markets. We've been talking about this for quite some time, and that's what we really have going on. And it's not changed. It really hasn't. There's not much that you can say about this. Boy, oh boy, I tell you, this computer, all of my frustration in this business comes from the computers. I just can't. I can't. Oh, now I can't. Oh dear, now I got a big problem. Oh dear. Okay, I think we have Arch on the line. Arch, are you on the line?
I am indeed.
The computers are biting a little bit out of the old apple today. I'm having a hard time with the machine. It just doesn't want to pull up. I'm sorry, Sam, that I didn't get you started at the right time. I had the wrong phone number in there, and that was the problem. But anyway, what I've done is I posted your charts of the Dow Jones and the S&P. You want to talk about those patterns that you're seeing, the one where you have the death cross and stuff like that? You want to give us your...
I would say the most important thing this morning is the oil. The oil spiked up on, we're coming up to an OPEC meeting on the 4th of December, and Saudi Arabia mentioned that they were going to go along with OPEC and try to stabilize things at current levels, and the oil spiked up to 42.75, but it's backed off to 41.30, and the price has been dropping. We went negative on it when it went under 90, and it broke down out of an important triangle pattern and the moving averages, and we've stayed negative on it since. And if it breaks the late August low at a little above 37.50, maybe 37.60 or 70, we think it's going to 33. And you were talking about deflation a minute ago, and we're coming up to the Saturn square to Neptune. I think there'll be 3 of them, but the first one will be this week, I think. Let's see. Saturn square Neptune on the day after the full moon. The full moon is this Wednesday. The Saturn-Neptune square is Thursday, early morning Eastern, 7:14 Eastern, and that's one of the most deflationary things you can have. Then Venus is going to hit the Neptune on Saturday, and then the Sun is going to hit it on Sunday. So that's probably news from the OPEC meeting.
Mm-hmm.
But I noticed that copper and nickel and the metal, the non-precious metals, are at like 12 and 14-year lows.
Yeah, I saw zinc made a 12-year low today in Europe. I saw that on Bloomberg when I got up this morning, which was surprising. And I think copper is at an 8-year low. So there's several of them that are, going in. The grains look, much lower, and we're still going lower in silver and gold. It's certainly not inflationary. I just wondered, what do you think the Federal Reserve is going to do with the interest rate thing? Anything astrologically that would tell us that there might be something coming in December?
Well, it's a very complex period around then. The 10th is the Mars-Uranus opposition, which starts the Mars-Uranus crash period for the coming year, and it lasts through December of next year. So we're not saying that it's got to crash at every crash period, because crash periods come every couple of years, but every crash that has taken place at the same 40% of that cycle, and that's amazing. I wrote the article in the mid-'90s about that. And it's happened 2 more times with the 01, 02, and the 08, 09 periods. And both of those were on schedule and promoted and followed in the newsletter. So I think I'm worried about a lot of things happening then. Then on the 15th, there is the next to last Uranus-Pluto square. Now, most astrologers think the Uranus-Pluto squares have finished last April, but that's the way they look at the sky. The way astronomers look at the sky, there are 2 more, and one will be on December the 15th, and the other will be on April the 1st. So we are still in the very dangerous Uranus-Pluto period, and one of the things that means is revolutions and civil unrest.
Well, we're seeing that everywhere.
Yes, we are, and anyway, that's due to intensify around the middle of December. And the OPEC meeting is on the 4th, and that's the day after the full moon. And then there are those aspects to Neptune coming out during their meeting. So I think that there may be news about inflation, deflation from them. I suspect, I don't know what's going to happen at the OPEC meeting. It could be one way or the other. They could try to get along and go along and cut production, or they can have a fight at the OPEC meeting and drop it to 33.
They certainly can. And they don't always agree.
it's very complicated time frame. I was just looking at some charts, and a number of different areas in stocks and in interest rates and in oil and in dollar index have been in periods where they need to break out one way or the other. And you said we were talking about the death crosses that have occurred in all of the stock market indices and several other things, including the dollar index, but the dollar index one has been negated. We had the 50 go below the 200-day moving average, and since that we were in a flat period from April to November, it was in a clear flat pattern, and it broke up out of it in early November, and it's been hanging around above the breakout point, so that the 50 has come back above the 200, negating the death cross in the dollar index. Now, nothing else has negated that. I will look now at the stock indices that you wanted to cover earlier. The SPX has come back up above none of the 50s have come well, the 50 has come above the 200 in the NASDAQ. Maybe it was late last week. But the Dow and the S&P are still a long ways away, and so are the New York Composite, which is acting much worse than the others, and it's a much broader index than the others. So I'm still cautious about this rally. I don't believe it, although it is very difficult to make the market go down in December because of just a lot of new money coming in. I see a lot of trouble in the sky, and it may not occur until down into the middle of December, and then it might get a Santa Claus rally from there. But right now we are spiking up in things, but they're not technically strong. We're getting up days on lower volume and down days on higher volume, which has been happening a couple of years now, and I don't know if that's explainable by the greater than 70% of the volume being from the machinery.
Sam,
And,
what do you think about
not human
the
emotion.
expensive? There's only about 150 stocks that are making this move. We've got about 100 stocks in the S&P, about 10 in the Dow, and 15 or so in the NASDAQ that are making the big move. The rest of the stocks are, below their 200-day moving average. And the chart that we posted for you earlier, we're seeing more new lows last week than we were new highs, even during the rally. That to me was surprising.
That's totally crazy, isn't it?
Yeah, it really is.
Puts a lot
hadn't
of
seen that in a while.
in the price index. Like, what is going along with the price? That's the final arbiter of profits is price, but there's a lot of problems with this price rise, technically speaking.
That's for sure. Well, listen, we want to thank you for being on. We'll have you on again soon, okay? Maybe right after the first of the year, we'll have you back on.
A note on the gold. It has never made a higher high on the intermediate level, so I've stayed out of it from the top. I bought a couple of times for short term and got stopped out between 2011 and now, but it still has not proven itself. Catch you later.
All right. Well, happy holidays to you, Arch. Bye-bye.
God bless.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, this is Billy Ray Valentine from the offices of Duke & Duke in Philadelphia, Pennsylvania at 600 South Broad Street. Folks, we posted the chart of the euro versus the U.S. dollar in here going back over the last 8 or 9 months. This is a chart from our good friend Jim Bartolioni, and as you can see, we have several numbers coming in here around this 106 level. Remember, the old low we had back here was at 104.5. We could easily take that out by a little bit, but there's some strong cycles that are starting to show up in the euro. As you can see, we have an equal move over the past 3 or 4 months coming in this week, and this is a daily chart. So sometime this week we might be seeing a bottom in the euro, and this would be going along with what we're seeing in the Canadian dollar, the Swiss franc, and the British pound, and some of the other things. In other words, the dollar is quite extended to the upside right now. And since the euro is 53% of the U.S. dollar index, this is the one that we want to be watching. It still is bearish, but we want to keep our eyes open because we're very, very close. We're very, very close in the gold, we believe. And so we want to keep that, watching that very, very cautiously too. If we miss the bottom, it doesn't come in at that 1050 level in the gold. It'll certainly give us one other chance to look to be a buyer of it down the road a bit. So keep an eye on that. As far as the oil is involved, or is talked about here, this was a jaw-boning thing on the Saudis' part, in my opinion. We're still down on the day, and even though we had a $2 a barrel rally, so that tells you the nature that the market is still relatively bearish at this level. I don't see any reason to be a buyer of crude oil in this area as of yet, so I would stand aside. All commodities look bad. As Arch was mentioning when we had Arch Crawford on just a minute or so ago, we basically have made new lows in zinc and nickel and a whole bunch of other commodities, including the grains, recently. And so it doesn't, there's no inflation out there as far as the overall. And this might be the thing that turns the whole stock market, folks. Maybe the commodities turn here and pull everything up. I don't know. So this is a bullish week in a bullish month, so we got to pay attention. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.